Hi guys, welcome back. Weekly market outlook here at FXStrategies.Asia. Today, 22nd of June, Saturday. And with that, we're going to prepare for the next upcoming trading week with potential further volatility. However, the market's momentum and hence volatility might remain limited. We have a set of consumer prices which are kicking in, and that's more or less everything it takes, which could obviously be something interesting here for us and potentially also offer volatility to us here, but we shall see actually by looking at the charts here for now and find out potential further market momentum. The Canadian dollar is first with the interest rate, the price index, obviously, and that might offer an array of volatility. The loonie, as it's referred to, was gearing up momentum, meaning obviously dollar CAD down, euro Canadian dollar obviously even further to the downside, and we should look into this because consumer prices might stabilize at current levels. And again, the oil market has been rising. A push positively in the oil market might actually offer further support for the Canadian dollar. And we can see from a technical point of view, EURCAD obviously breaking currently the 50 moving average, and with that further downside momentum might occur. The daily chart suggests that there is further motivation to lower price levels if the current area might be broken further, and with that we are straight back here in our technical patterns. Weekly support level currently holding steady. If this zone is going to be broken further in further negative momentum here for a couple of pips at least here, 50 pips to the downside might occur, and then subsequently we observe that 50 moving average has been broken. Downside pressure on the daily, on the weekly, even towards the monthly chart might cause that further tumbling prices could be the result, and hence obviously the Canadian dollar might gear up potential as other currencies remain rather under pressure. Talk about the euro in particular, and with the recent break here we can see that a long-term weekly chart indicated, daily chart indicated pressure might occur. Let's move from the euro towards the Canadian dollar to the US towards the Canadian dollar. Also, this market has been broken. Has broken the 50 moving average, the simple moving average, which currently kind of acted as a bit of a support zone. So downside motivation might continue, as also long-term charts suggest. And here we could see that a potential further rising trend line and the long-term sideways price pattern, whether we indicate this towards this zone here or even the wider zone, might offer downside momentum to continue, in particular since the resistance area holds steady and the market motivation still has quite a bit of pressure, potentially pressure 130 pips towards the rising 50 moving average. Downside momentum again in the Canadian dollar, the loonie as it's called, could continue. Whether the oil price will offer further potential momentum, the Canadian dollar has long not followed the oil market per se, is going to be the question here for this week. The recent rise in oil certainly could be something which would help the Canadian dollar, and hence any potential momentum. Look at the Middle East tensions, right? Flaring up, firing up again could cause that the technicals a rising trend line here, monthly chart to the upside, weekly chart breaking above certain levels could be proven or could be something which is behind a further market rise in prices. Yet again, and now we are back towards the figures. If consumer prices will remain stable or slightly higher, this would give the Canadian dollar a potential lift towards higher levels and adding actually obviously further momentum to higher prices. Let's move further. Australian dollar is also quite interesting here at the moment. Consumer prices are expected to weaken slightly. With that, the current market expectation here, yearly basis, down from 3.6 towards the 3.5% level is going to be something interesting here. Any further potential weakness in this market might offer price fluctuations here for the Australian dollar as well. But let's look at the Aussie chart, as the Australian dollar is currently within back the falling potential trend. Downside pressure on the Australian dollar, in particular against the greenback, the US dollar, could be the result here. If the resistance area, let's drag this line a bit lower here, it can be defended, right? If this resistance trend line, we could also draw a bit of a shorter term trend here. The red color, a falling trend line is going to be the important part, and this is based on the daily chart. Not too much motivation last week in this market, but now pressure 50 pips to the rising 50 moving average could be the outcome, and we shall see, because long term, and we still have the other red color falling trend line all the way from this long term falling price trend here might give us a clarity. Let's zoom into the actual price range here based on the on the weekly chart. We can see wicks all over the place here. The market not ready to break higher. Downside momentum could be the outcome, and hence sell stop as we see it here in this market environment. A sell stop price might be the interesting area here, where if the market below that weekly range continues to weaken, could kind of intensify and could even fall back to further price market momentum. So hence there is a nice 100 pips difference towards the stop loss, and say 130, 140 pips towards the next major support zone. Nice rewards to risk ratio, bringing us further optimism. And hence, obviously, if prices fall, if basically consumer prices in Australia will really offer the 3.5, maybe 3.4% on an annual basis, the Australian dollar might offer some sort of downside motivation. However, if the opposite is key, 3.5, 3.6% consumer prices, we shall look into other currency pairs. The pound against the Aussie, currently in a bit of a free fall actually. Still room to the downside. The pound, which is a bit under pressure, might weaken further. The Australian dollar could gear up momentum, and hence obviously causing the pound Aussie to even weaken further, with downside potential taking over. Similarly to the euro against the Australian dollar, currently as well in a bit of a supported stage here. But again, we have broken recent resistance on the left, support on the right, support on the right. We've broken this support, and any break, any lower price levels or any retest here of that price zone at around the 160, 150 area might indicate further downside pressure, and another step to the downside with a stronger Australian dollar, with potentially as expected or slightly higher consumer prices, could cause upside momentum for the Aussie as well to develop. Those are major figures here for this upcoming week next week. But Friday, we get also the PCE deflator, PCE price index, which is slightly accumulated, slightly different, comparing it with the price index in the US here. But this one is something important here based on what the Federal Reserve is going to take into their consideration. So these numbers might give us some long-term outlook on into the development of the greenback, because the Federal Reserve had recently not adjusted interest rates lower. They want to wait first before consumer prices, before the general inflationary momentum cools down. Cooling of inflation might indeed weaken the US dollar. Currently, the greenback seems to be one of the reasons, at least for the greenback. Currently, it is rather rising. Stronger dollar, consumer prices at certain levels, but the Federal Reserve not reducing rates at the moment. Interest rates remaining stable, causing attractiveness for investors, and hence obviously the US dollar, the greenback, might continue to strengthen and remain rather strong which currently is what the market sentiment is telling us. So that's one of the major figures we should look out and watch out for on Friday for this upcoming week. In between, we got smaller figures, smaller results here. Name, for example, GDP, the gross domestic product as well. Quite a backward looking indicator, so not really something important for the immediate price development. But let's focus on the charts for a little bit and pick out a couple of currencies and markets which might actually turn quite interesting for this upcoming week. Silver and gold, just to name the precious metal side here. Silver, let's start with that one, had recently grown a lot of momentum again. Stronger dollar, silver still rising. However, on Friday, we had the market tumbling again and indicating, hence, that's an engulfing candlestick, something we'd seen before. Market rising, boom, kind of being pushed to the downside. Same story here, market rising on Friday, profit taking, kicking in all the way back towards the supportive range here. And that might not offer a lot of positivity here to markets, but instead could cause further negative sentiment. Any break of the 29 support zone, 29 US dollar, or subsequently as well the 50 moving average, hence might cause the market to weaken further. Gold similarly behaving as silver, as we just mentioned, even a stronger bearish engulfing candlestick pattern. We get these two moving averages here. First of all, the rising, slightly rising, currently stabilizing 50 moving average simple, and the 50 moving average as an exponential indication here is just helping the market nicely to stabilize. However, we have two opportunities. First of all, below the 50 moving average now might indicate further market weakness. Above, slightly above the exponential moving average 50 might indicate the market stabilizing itself and potentially offering upside momentum. However, long-term charts might just remain shaky, not too much to be expected, so rather downside momentum potentially continue. Stock markets similarly, and actually if stock markets as they do might also face further profit taking, quite often we have similar motivation in precious metals. In order for somebody who is maybe long on the equities side or in the indices, S&P, NASDAQ, the Dow Jones, for example, where profits causing the markets to kind of fluctuate a negative or falter slightly, and then potentially traders are changing their opportunities, basically having potential profits in the precious metals market. They might hence close out their positions and taking that free margin in order to finance their positions in the equities or index market side. So quite often when we see precious metals going down, or as well as the opposite side, actually, when we see indices going lower, profit taking in precious metals might be the secondary part. And that's exactly what we observe currently, the S&P facing downside pressure as we speak, and we see something similar as well when looking at the NASDAQ, which is also causing a slight array of negative price sentiment. That's not a big surprise here, as we've seen markets were kind of quite in overbought condition, meaning rising to the upside. The S&P here and as well as the NASDAQ was is currently in well overbought territory based on the relative strength index. Hence, downside momentum might continue at least for a while until either the trend line is going to be tested or again a median price range area here, where the long-term support based on 19,000 18,900 something might be seen, where then the market is about ready to potentially kind of just continue, start to rise again somehow further. So that's at least for the index market at the moment. We're looking basically for some negative price momentum to continue. Let's see, maybe over the weekend we get further news events, further risk off sentiment, or anything from the headlines kind of view, which could continue to cause the index market to weaken somehow further. What else do we have? We have the crypto world. Bitcoin looking set to weaken further. we could deviate from this topic slightly by saying, hey, maybe the European Championship football-wise is causing more attraction of investors, traders, millennials who focus more maybe on their sponsors, Adidas or AliExpress, to name a few, where the attraction is kind of differently pushed. Cryptos might, the second half of the year, hence appreciate a little bit further. Bitcoin weakening at the moment. There is not really much positivity as we can observe. We can look at Ether, which is as well currently kind of rather on the weaker side of things. So the markets in general look kind of a bit shaky as we speak. Last but not least, we should focus as well on the Japanese yen, and in particular the US dollar, the greenback against the JPY, because the 160 level by the big guy, one of the big guys from the Bank of Japan, currently a currency specialist, stating that, hey, we will watch the 160 US dollar level quite closely. That's exactly where the market trades at the moment. So I wouldn't be super surprised if on Monday we wake up in the morning and seeing the market kind of turning back to the downside again, by potential seeing further interventions like we've seen in the past. Maybe the Bank of Japan is just acting somehow again wildly and causing fluctuations in the markets. Whether this is going to give us a long-term change in market direction is the question, but be prepared for potential profit taking here in the Japanese yen. Guys, that's my outlook so far. So many thanks for tuning in, and we shall see what else we'll get to know and what we'll get to see throughout the course of the week. Thanks everyone for tuning in. Have a good one, and see you guys in one of our next webinars early next week. Take care. See you then. Ciao, ciao.